Over the last 48 hours, Bitcoin has broken through some key short-term resistance levels, and we're starting to see a reversal come through in other sectors of the market, just like the US dollar that has been on a mega 10-week run, getting closer to its resistance level. Is everything about to change? Are we about to explode? And basically, most people are being left behind. Time is running out, as the old YouTube title says. Let's explore that in today's video as we take a look at the S&P 500, the NASDAQ, US dollar, Bitcoin, Ethereum, amongst a whole host of other data to get through. You've reached your home of macro cycle analysis here, TIA Crypto, studying the past to forecast the future. As I said, we're covering the stock markets, crypto, Bitcoin, and of course, the real estate cycle. Guys, let's dive in to the data, reminding ourselves of where we currently sit with a day to go in September. As you click that like and subscribe, here we are looking at the data ending September, which has basically been a red month for the stock markets. However, as I pointed out on the channel in early September, as you would have seen on the channel here, and yes, some of you have mentioned that again, reminded us and myself that we were expecting September not to be as bad for BTC as most had expected. So we're looking at, so far, a day and a half to go now, about 36 hours to go. We're in a green month and we're up to 4.3%. It was 1% earlier, then 2%, now we're at 4.3. Anything can happen in BTC over the next day and a half, but for now, it's looking all right. And basically, I am putting it down as it's not as bad as most had anticipated for the month of September. And that also goes for the stock markets. We were looking at single-digit pullbacks in the stock market. Now, all of this was coming together for BTC, because it's the major one that we look at here, but the overall cycle, that these pullbacks in a macro bull market, regardless of what all the economic data and news events and talking heads are telling us, we typically see single-digit pullbacks in the stock market during a macro bull market, and that's precisely what has happened. So as a reminder here, we have red August. This case was a red September, so big down in August and September isn't a bad thing. That is the buy the dip opportunity. I know some are saying you're forgetting about all the stuff going on in the economy in the US and this thing's about to collapse, and see you at 12K Bitcoin. Let's stick with the data rather than the he said, she said, because the data for October is actually looking pretty positive. We're looking at a 77% chance of October being higher than September. And if we piece this together with the pre-election year and bigger cycles, not just one-off months, then we start to put together a green quarter and potentially an even greener 2023 leading into a green 2024. We're getting a bit ahead of ourselves here, but of course we are looking more long term. The data is suggesting longer term. We're looking at quarter four as well, being up 92% of the time, so a percentage higher here, 92% of the time, with an average of 7%. I think it's potentially going to be more than that, more than 7%, based on the other data that we've covered here on the channel. 9 out of 10 times we'll typically see a green quarter. Okay, so we've started to piece together the short term, the medium term, the longer term. This, of course, all means one thing for BTC. It's not going to be as bad as they are hoping for in the macro, where many are hoping and expecting prices underneath 20K, underneath 15K, 18K, whatever K you want to put it. You still see those calls out there, but they will lessen over the coming months. Especially if you want to piece that together with yesterday's video, as I went through some insane pre-halving price targets as well, which is basically leading us into roughly April of 2024. Okay, so for the longer term, things are looking okay for the early stage of the bull market, as we've covered here. October, potentially 77% of the time, close to 8 out of 10 times, we'll probably see a green month in October, especially as August and September were red. And if we did get a red October, 0.1%, 0.7%, and there's really just one bad October here at -3%. So the other piece here is better times are nearly here. Looking at, again, October, November, and December, Pre-election years, looks like December is going to be a pretty big one for this year. This is the pre-election year, so potentially we might see some of that positivity flow through into Bitcoin and cryptos as well. Potentially some mini alt seasons there. Not going to get carried away because I think there's still a bit more time for altcoins. But looking at the macro picture here, we are looking to trade the markets and actually put money into them, not just analyze them. As typically that's what happens. We need to be making some money from this. So better times could be around the corner. Now, you may see some of my replies here. This is a big mental barrier for a lot of people in the markets in the early stages of macro bull markets. So they're looking at 2008. That was the collapse year, of course. The big financial crisis, the GFC, the global financial crisis. Everyone looks to the market to give them another global financial crisis. But it typically doesn't happen after you've already seen 20%, 27% down. And basically what I'm talking about here is if you keep trading every year that you want to see a repeat of 1 year out of 10, then your account balance is probably going to be a little bit destroyed. We're here to make money. This is what we do full time. That's part of TIA Crypto. And if you want to learn more, the link is in the top of the video description here, where you can get access to a lot of free content, trading guides, discounts, economic and crypto reports. It can even get you into our free Discord. You can go through and see what other traders are doing in there. There's full-time, there's part-time, long-term and short-term traders. These guys are making some pretty significant gains over there, especially with their moon bags as well. So go and check that link out in the top of the video description. So basically, try not to get into the trap of recession is here, recession here, recession is here every single damn quarter, year, whatever, okay? You've hopefully seen that by now, that they called it throughout 2022, didn't happen. Good buy the dip opportunities, market is up from that point. S&P 500, buy the dip opportunities, that's what I was talking about through the lows. I got crucified online talking about the lows potentially being in June. We got slightly lower. Remember, we're not here to pick the exact bottom, but we just want to identify when those lows are. June and October, September, October were really good times. March was another key low here, and the market's been up from that point. So I'm going to do another video coming up as well, looking at the 200-day moving average for the S&P and for the NASDAQ, and of course, explain that into Bitcoin terms as well. What does that mean for us? But what we can see from this particular video is, well, we've seen 6.3% down, and we're still above the 200-day moving average. And just at a quick glance here over the last 7 or so years, typically the market doesn't go too far under the 200-day moving average, especially after it's already gone under it. So we had one big move down here, the bear market of 2022, which is obviously the best time to be buying because the lows there, and then the market's come back and it's sitting on top. So we don't often get a double dip underneath the 200-day moving average so close to each other. You can see we had touches here. The market went under and then bounced back above it. And there's a touch, a touch, a touch, and away. Yes, we've got a huge pandemic. It's a black swan event, but it's not so close to it. You've got a couple of years apart here, a year and a half, a couple of years apart. It doesn't necessarily or typically happen again so close to those dates there. This only barely went above, and that was the end of the move, and then a touch, touch, away you go. Look back in history as well, all the way back to the global financial crisis. It consolidated under the 200-day, away she goes. Consolidated under the 200-day, away she goes. A touch, 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 and the rest is history there. So I'll go through this in a little more detail in future videos. But the total drop here is 7.7%. So far, if I've got the numbers almost dead on there, 7.7. Remember, we're looking at single-digit pullbacks all the way up here, not to be too worried about anything else happening in the market. It's not over yet, but this is what we have so far, 7.7. Ideally, we want to see the green close above the previous month here. And if we look to the end of the month, which has only got 10 hours to go for the trading session, potentially we will get that close above last month's low. So last month's low was 43.50, and we're currently trading at 43.60 with 10 hours to go. So let's keep an eye on that. NASDAQ is in a similar situation, but slightly stronger, as it hasn't broken as low as the S&P 500. Still above its 50% level, still above holding support as well, and well and truly above 200-day moving average. Very similar patterns across here. And in terms of the pullback, it's still just within single digits at 9.2%. Now, I'm not expecting this one to remain in single digits throughout the entire macro bull market, but nonetheless, it's still sitting in pretty sweet single digits. As for the US dollar, it is finding some resistance now at the 50% level, 107.2. Ideally here, for the bears in the market, in the S&P 500, you'd want to see this come back and hold the ground here at around 105 and start to mount another attack and break through the 107. That is going to be the key level for the market to break through, to then see asset prices come down a little bit further. Now, there's not a direct correlation here, but typically we see some sort of correlation here. And at the moment, it seems to be running pretty well. We're seeing a rejection here. We're seeing the US dollar come down, and we're seeing a bounce on the stock market and a bounce on Bitcoin. And Bitcoin is bouncing from a higher low, which is a pretty good sign for at least the short term as we look at it on the daily here. Lows are lows, but when they are higher lows, that means you're finding support at higher prices, which means investors or holders, whatever time frame they're looking at, are looking to buy up Bitcoin at higher and higher prices because they don't expect the price to come back down to the previous low. So that's typically a bullish sign. Now, we're not completely clearly bullish yet because we haven't broken through this top here at around 27,500. And as I pointed out on Twitter a few times, this is the key level here, 28,400. That one there is the 50% level from the current cycle top to the current cycle low here, at least in this pullback going into September. So ideally, we want to get back above the 50% level. So for the US dollar, it's good news, at least for Bitcoin. It's looking slightly weaker here. The big key difference to look out for, and this is just purely for GAN analysts, is another day down. So far, we've had 1-2 days down. These are not just red days, but this is a beautiful key signal to know about. No matter which analysis you cover, no matter where you look at your news, this is super, super key. If you can see 3 clear days down, lower highs, lower lows, that is going to tell you something very, very important about the market direction coming up. Now, it might not happen straight away and it capitulates. Maybe we start to see it climb again and test, but 3 days down is a very strong reversal signal. Has to be lower highs, lower lows. We've seen something similar here, but you got another push higher. So this is a really big one. Pay attention to it in the next 24 hours for the US dollar, because if that happens over the course of the next trading session, so probably early next week, then we're going to see some pretty good moves, I think, to the downside over a longer period. Let's not get too far ahead of ourselves yet, but that is the big signal that I'm waiting for there. And that's going to give a little more relief to BTC. BTC has held its line here at $25,000, the June low, the September low, lovely 3 months apart as well. Meanwhile, the US dollar was just going skyrocketing from that point from July into September, but Bitcoin has managed to hold the low here. So good news at least there for BTC if we can get a break above $28,400 as well. I've been pointing that out for quite some time. Yes, the titles do get a little bit boring with the time is running out and all those sorts of things, the stuff that's plastered all over YouTube. But really, I do honestly believe that time is running out based on the analysis that we've looked at here, based on plenty of the macro stuff that we've gone through in the videos, because essentially there can only be so much time left in these zones before they break out. And that's typically the areas when they break out, it's where many get a little bit of FOMO and start to buy in at higher and higher prices, which spurs on the bull market. Psychologically speaking, that's how those bull markets happen. So if you find yourself in that situation, try to create some sort of plan. If you need to, go across the link in the top of the video description for TIA Premium, and you can also check out the results that our traders are getting, and also check out some of the reviews there that many of the students are posting about themselves. You can also check that out there. Okay, so that's what's happening with BTC. I've got a forward 6-month video coming up looking at the returns from now into the next 6 months and 12 months, starting from October. So stay tuned to that. A quick update on Ethereum, as I mentioned, I would look at that as well. This has also had a nice move to the upside. And just for your key levels, $1,780 is the next key 50%. And if we take it back to the top here, 1836. So if you wanted to play it a little more conservatively, I would be waiting for that 1840 level. And if you wanted to get in just that little bit quicker, I'm probably looking somewhere around 1780 with consolidation above that level for the bulls if you're looking for that longer term entry point for Ethereum. Now I'm just going to end it on this particular post from my brother's account. This is where I think we are in the cycle. We're at the perfect time in the cycle where the average Joe doesn't give an F about crypto or the economy. You know, people are sort of just living their lives again. The bears are still figuring out which way is up. I think that's a pretty good joke there on the macro bears at least. Short-term, long-term, different story. And new money isn't entering. We're definitely not seeing that new money enter like it does at the tops of the market. And that goes for retail and institutions as well. Think about Michael Saylor, okay? If you're in crypto or Bitcoin, you must have heard of Michael Saylor. And his average price is above the current market right now. He owns almost the most Bitcoin in the world, 140, 150,000 BTC. And his average price is around $29,500. Now, of course, that's going to change over time as well. But his average price is above the market, and he has put in multi-billions of dollars into the market. So don't feel too bad if you're entering at 27,000 or 28,000 or 26,000. You've got people with billions of dollars on the line who have entered at higher prices. Now, does that mean the market has to go up? Of course not. But even people with a lot of money can make huge financial mistakes. Sure, we all know that. But typically when it comes to investing, we think we're the only ones that can make mistakes. But trust me, everyone makes mistakes. So those with half a plan and stick through this period will be the lucky ones when things really heat up. And like we pointed out in yesterday's video, if you haven't seen it, I'll leave a link to it at the end of this video here. That's looking at a lot of timing and a lot of prices as well. We're looking probably 12 months, a little bit further, probably second half of 2024 when they really start to heat up for the stock markets, for crypto and Bitcoin and that sort of stuff. So if you don't have a plan, get something together. I've given you some of the reasons there, links at the top of the video description as well. Keep grinding, building, leveling up, earn those stripes. That's what this game is all about. And there is a link to Michael's YouTube channel as well. He's been going for quite some time, just looking at the short-term trades. So guys, that's a wrap for today's video. Like, subscribe. See you at the next one. Have a great day. Till then, peace out.